Good afternoon, ladies and gentlemen. My name is Jaboney Rodriguez, and we'll be talking about Morgan Stanley today. What is Morgan Stanley? Morgan Stanley is a wealth management company based here in the United States, actually New York. It is a publicly traded company. Industry is financial services. It was founded in 1935 by Mr. Henry S. Morgan and Mr. Harold Stanley. It offers its services worldwide: investment banking, commercial banking, asset management. Its revenue yearly, as of 2012, they finished with over $32 billion. It operates in the U.S. on a budget of over $515 million. And employs over 60,000 people. It was founded in 1935. A couple other fun facts. It's number one in global equity trading. Number one in equity underwriting trading. Number one in the market in 2004 for IPO market share. And number two in global debt underwriting in 2004. Let's talk about the company this year and how it started off. It started off the year at just over $15. You know, that's not bad in the first quarter. Moved into the second quarter, moving up, very in a positive trend, as you can see. At just under $25. And now currently above $30, doubling the first quarter. It's doing well this year, very well. Doubling than where it started off. Let me get some numbers for you. It's investment banking. In 2013, at the beginning of the year, its net revenues started at $631 and finished off the quarter after taxes $198. The second quarter of this year, its net revenues were $673, and after taxes finished at $160. And the third quarter that we just finished, its net revenues are rising at $828 million, and after pre-tax taxes at $300 million exactly. Morgan Stanley's first tier capital ratio is approximately 15%, and common ratio approximately 12%. These are stock options, by the way. You got the commons, and then you got the capital. Now, what's making these quarters and allowing them to be productive this year is the numbers, of course. The firm's net revenues, non-GAAP, beginning of the year, they started off with some, not debt, but operating at a bit loss after last year. It was a tough year on the market. So the firm's net revenues at the beginning of the year were $8.1 million. Its DVA impact was a negative $171 million. And the firm's net revenues gap with gap was 7.9 million, almost 8, which are pretty good for that beginning of the year. In the second quarter of this year, the firm's net revenues non-GAAP were $8.3 million. The DVA impact was $175 million, which is a complete turnaround from that previous what they had to start the year with, having to make up ground and finishing $4 million in profit for the second quarter of this year. And the firm net revenues with GAAP is $8.5 million. Now finishing up with this third quarter, the firm's net revenues non-GAAP was $7.5 million. DVA impact was $2,062,000. Operating at a bit of a loss this quarter, hoping to make up ground in the fourth, of course. And the firm's net revenues with GAAP was 5.2. And you're asking me, what is all this? All this is a growing market. And after a long year and a couple of minor speed bumps in the road, it's growing. Starting at 1550 and slowly closing the year in this fourth quarter at 3130. I appreciate your time and effort, ladies and gentlemen. I hope you have a solid Christmas.